There we Hi, everybody. Welcome to your weekly market call. My name's Lee Honish. I am joined by Fred Solomon. How are you today, Fred?
Lee, I'm doing great. I really am. Yeah.
Yeah, it's really interesting. And we're going to talk about all the news that you guys should be aware of when making a decision. In the description link on both Facebook and here live, please take advantage of the links. Please join Home Advocates. We're still giving you the upgrade price to be a part of our program. That means guaranteed leads. That means guaranteed face-to-face with a built-in automated call center. All you have to do is send us an email. We'll send you leads and get you started. We give you a 1 hour one-on-one private startup, plus everything else that we do, especially page one of Google. And if you don't think that's a big deal, that's a huge deal. I can't stress it enough. Your clients are literally going to look you up. And when you can tell them, go to Home Advocates, you don't need to type in anything special. We are line one, page one, and you are on the front page of our website because I'm proud to host all of you as Home Advocates. Also, for those that need to schedule their red videos, there's a link in the description. And lastly, I'm doing email. I can't stress this enough, and we'll go through it a little bit at the end with the data we're going to cover. But I have a 61% open rate. It's because I create content. It's because people open my emails, and I want to do that for all of you, and I want to do it for your list. So the links are all there. For those that are live, you've got it in the chat bar. For those that are on Facebook, it's in the description. And with all of that said, Fred, let's dive into the news. I'm going to share the screen because I don't want people to think that I am downplaying this at all. All right.
No, Lee, you're exaggerating. You're a negative Nelly, and you are
Oh,
pulling
yeah.
these stats out of your
Out of
head.
my butt. Out of my
Yeah.
butt. I'm just here to be negative. So let's start with the big dog themselves. 5 consecutive months of decline, Fred. We are 5.4%. But the key highlights, which I really found interesting, rarely does NAR actually produce, you know, real stats for people to look at. They try to play them up and try to keep a very optimistic situation. But as I broke it down and I looked at the numbers that they're talking about, I mean, we're down 14% year over year. And by the way, just type in NAR sales, right? 14.2% from a year ago, Fred. Remember a year ago when it was all wine and roses and nothing could be wrong at the end of July last year?
Yeah. I was watching CNBC this morning, and they were saying pending sales are down 20%. And I'm going to try to find the article or pending home sales down. I'm going to post that because that to me was even bigger numbers than what you're talking about here. And I'm going to see if I can find that. Yeah, here it is right here. This is 1 hour ago. And this is exactly what I just heard on CNBC. And I'm going to post this in the chat
But
box right
Fred,
now.
they're fake news. They're the left
No,
wing.
there's that's the link right there. Pending home sales down 20%. But look, me and you, we're just, we're just these negative guys. Okay. We're just being negative. No,
Right. I
no.
mean, everything I'm showing on the screen has everything to do with me and not Lawrence Yun of the National Association of Realtors.
And I want to make this clear, very clear. You know, we used to do those all your events in Vegas and stuff like that. And I would come up and talk right after you, or I would introduce you, and I knew what was going to come out of your mouth because I know you. And I don't want to be a controversial type of person. I'm not going to like discredit everything that you just said because that's not my style. But I and I would say, it's okay not to see eye to eye with someone. And I get it. You watch the data and you pay attention to the news. I get all that stuff. I get it. I really get it. But I would not always agree with what you were saying. And I always had to say it in a really nice way because you invited me to speak there, and I'm not there to discredit anybody. I'm just there to offer a second opinion or another opinion on a coin. There's heads and there's tails. You know, when you flip it, and at the beginning of a football game, someone calls heads and someone calls tails. That's just the way it is. So I'm just saying that there's two sides to every argument, but right now there's only one side. And that is,
I gotta say this for the record. I am very blessed, not lucky, because people get mad at me because I do put in a lot of work to my numbers. I have been gifted with the ability to see things like this happening, and I don't know if it's a great gift. It's like being able to see the end of the world. But this was inevitable to me the minute they started doing when they started doing the forbearance agreements. And if it weren't for people like Pete Sanchez going, what are you going to do about it? Right? Do what? I mean, create an entire new company with an image of being an advocate to make sure that when those agents are searched, they're on page 1 of Google. They use an appropriate way to get in front of people. They have an appropriate search pattern. They send out content. They create videos. If you had told me that during the forbearance and the pandemic, I would have laughed at you, Fred. I would have literally have laughed at you to where we are right now. And if it weren't for you or Pete Sanchez and a lot of people along the way, we wouldn't be where we are right now, where we're all positioned in a very unique situation. The market is doing exactly what I thought it would do. In fact, it's even more dramatic than even I projected. And it's not going to end anytime soon, Fred.
well, again, you know, this is a marketing call for coaching students, and the coaching students are all realtors, of which I am one. So what we do with this information is we say interest rates are up 2.75%. Pending home sales are down 20%. Inventory is increasing. So in my particular area of Palm Springs, we went from 0.7 to 0.9 to 1.3 to 1.7 months worth of inventory. 1.7 is the latest number. So now we are seeing inventory increase.
Yeah, the average is now 3 months nationally. We went from half a month not too long ago to now 3 months, literally within this very short span of time. And what I'm still shocked by are people that say it's not going to be that bad. It's going to be a soft landing. This is more dramatic than 2007. It was a much slower decline. It took 3 years. This is much faster from my perspective. This is very dramatic. So, I mean, just from a banking standpoint, if I were sitting in a meeting right now, Fred, and somebody asked me, all right, what information I'd lay out, here's this, and this, and here's Black Knight, and here's all the comparative data, here's our own data, here's our default rates, like I'd lay it all out and go, it's faster than 2007, to which my CEO, which we now see with Wells, Chase, B of A, they start buying back their own stock, right? They start cash riching the actual company. And we're starting to see where they're starting to put more cash on hand, lay off production, and start to work on retention. And that's the way we declare it in the banking world, right? You start to move towards an asset manager mindset. And we're seeing that out of almost every company. If you guys watch CNBC or Mad Money or anything on Fox, if you look at the companies, the way they break them down, they're all going into turtle mode. They're all going into turtle mode. What can we lay off? How do we get more cash back out of our stock? How do we get cash, period? And let's just ride out the storm and see where it goes. Because they all expect the worst. And you should when you're talking, some of the stories we're about to talk about.
So, with absolutely, Lee, everything you say is spot on. You've been right. You've been more right than I ever thought you were going to be right. I thought, I mean, I'm not going to lie. I thought you were being aggressive. I thought, look, the economy isn't losing jobs. Okay. So usually in a recession, the economy loses jobs, but this is a different recession. And they're going to announce it tomorrow, by the way.
Well,
They're
and
going to
devil's
announce.
advocate, Fred, why would I want to work when I think the government's going to declare monkeypox and give me a check? Because that's what everybody's thinking right now. Everybody's thinking a third lockdown and a check. Why would I want to work?
Well, the Fed announcement is at 11 o'clock, which is an hour and a half from now. That's the Fed announcement. It's looking like 3/4 to 1 point.
It'll be
And they were
one point.
talking.
It'll be one full point. I'm sure of
So
it.
we're going to find out in an hour and a half. Tomorrow, we're going to find out the new Webster's Dictionary definition of the word GDP, gross domestic product.
Are
From
we
what I
doing the
understand,
GOP or the Dems? I mean, whose definition are we taking on this?
no,
I mean, the
Brendan,
current administration is literally writing their own definition as we speak in preparation.
that's
God bless
me.
them.
Me and Brendan were having a kick about this on my Facebook wall. And I know he's probably listening. I don't know if I haven't checked to see
He's
if
there.
he's, yeah. And we're just like, all right, if they're not going to massage the data, they're just going to massage the definition of the word recession. And he's like shaking his head. No, it's hurting my head. I'm shaking it so hard, and I'm like playing the song "Shake, Shake Your Booty." So, I'm just seriously looking at this, and we're just, how can we use the information? How can we do it in a way that's not a like negative Nelly way? Hey,
Well,
if you're
I
thinking,
mean, even if you just took the key highlights, right? I don't expect you guys to dive into the numbers or read their PDFs or go into their individual breakdowns. And by the way, only 1% of pre-foreclosure activity made up the current market. So for those of you working pre-foreclosure, congratulations. Imagine it 99% more based on what NAR is indicating. And for those that are out there tagging and already know the numbers, depending on the report, they're up 700%, and we're still only talking 1% of activity. That is a staggering amount of activity coming over the next couple of years in pre-foreclosure activity. I mean, it's short. It is 2007 short sale type numbers, if not greater. I won't know, and I won't know how bad it is until I see if they're really going to evict renters as well and start displacing people on that scale, Fred. But if you're displacing 15 million people in this country over the next couple of years, it's a lot. That's a lot of people.
so I wanna explain to everybody that's listening how to talk to your clients for it to make sense and to use this data that is, that we're showing on the screen right now, and to use this pending sales data that's down 20%. And I provided the link. So if they have an investment property or a vacation home and they were thinking of selling, when do you sell, before or after home prices drop? Obviously, that's a simple answer. With this data of pending home sales down 20%, interest rates up 2.75, inventory increasing, and every realtor should know what the number of months of inventory are in the markets that they're in, and they should analyze it and show people what's happening to the inventory levels. So that way you're not making this stuff up. Provide the articles and get that information to your potential sellers or people that are in your network on Facebook or in your email database or whatever, and take the information and just say, hey, look, if you're thinking of it, now's the time. But the first question out of people's mouth is, where am I going to go? Where am I going to go?
Where am I going to go? That is,
where am I
and
gonna
by
go?
the way, that is the national message.
Right.
Where am I going to go?
Yeah. So here's how I address that issue. If you are downsizing, okay? If you are downsizing, you're going to buy a less expensive home. So let's say home prices are, down, I don't know, in my neighborhood, I'm going to say 15% in the last 4 months. They've come down 15%. So I don't know. In Orange County, that's not the case. They're still getting 30 offers on turnkey properties. So it's not the same everywhere you go. And South Florida, that's another area that's strong because we talked to Jane and she tells us what's going on in that market. And I think Brendan's in that market as well. And he knows what's going on. And that's a guy who really follows the market data. And I really respect people who are into the data because that's how I operate. Like when someone asks me a question, I can spit the answer right off the top of my head. I love the data. Lee loves the data. We are
Love
data. Data
I'm ready to die for my data.
Right. And so when we talk to these clients and we have this information to give them and we are telling them objectively, not one-sided, right? We're just here to give them the information so they can make a smart, informed decision by themselves by having the correct formula. And the correct formula is what's going to help you. So the data says this, this, and this. The correct formula is, are you thinking of selling? If you are, maybe sell high, sell your bigger home and downsize into a smaller home, because a 20% decrease on $1 million home is $200,000. A 20% decrease on a $600,000 home is $120,000. So if you sell at the top of the market or on the market on the way down, and then you buy something smaller, your percentages are in your favor. And even if you were to rent, go over these numbers with the clients and go through the scenario and talk them through it, because I know that's what these clients are asking. That's what I talk about every time I talk to these. Where am I going to go, Fred? Well, I don't know. Where do you want to go? What do you want to do? What's the next chapter of your book? What do you want to accomplish? Let's talk about this and figure out what makes sense. Because if you sell and you move out of the state of California, guess what? You ain't coming back.
Because yes, I would agree, because everywhere else is sunnier than California at this moment. And it's not going to get much better in California. California has too many issues, and I think they've just buried themselves in too much debt. And LA's on mask mandate. Monkeypox could easily cause lockdowns again, especially for LA County. I mean, you're talking about the major metro taking the biggest hit. I mean, there's a reason why so many people have left and never came back and went to Austin or went to Florida or wherever they went. And I'm going to stress this again because it's on the screen. Distressed sales make up less than 1% of sales. It's mind-boggling for those that have actually gotten data and seen the amount of data that's available in their area just as it is right now, to realize that we're talking less than 1%. what an opportunity for going after people, you know, that have to sell. I don't see any way around it. I love Lawrence Yune's comments, by the way. Interestingly, though, the record low pace of days on market implies a fuzzier picture on home prices. Home priced right. So this is the new term, and I've actually discussed this, Fred. Prices are now, we're officially in the priced right category, right? Before things were going over value, you were getting offers to buy a year of Netflix and whatever, all the craziness. Now we're pricing homes correctly. This summer seems to be the era of pricing correctly, when in fact, all we're doing is basing it on market demand. Even when it was red hot, you're just basing it on market demand. You look at the numbers, you set the numbers, that's the as is price for today. Does that mean somebody will pay more? Of course it does. But now you're basing it on a set of numbers based on the area, and now homes are priced correctly. I love when they use this term. Homes are priced right now, which to me is hilarious. About 6 months from today, if you guys all want to mark your calendar, somewhere within the next 6 months, prices will be priced below market value because there is a lack of demand. I mean, it's just simply the issue. And as the recession looms and people try to hold on to their money, these are facts that you can't get around. And good on Lawrence Yun for putting somewhat of a positive spin on his comments, but even he has to say it. I have no idea where the prices are going. Really? They look like they're going down to me, bro. I mean, when you give out free money, when you allow people not to make payments, when you have a supply and demand issue, when you have jobs not equaling what it costs for rent. I can't even imagine in your position, Fred, when people walk in who want to buy and you've got to look at, their debt to income ratio and their employment. I mean, I'm guessing you pre-qualify well, but do you have to have an uncomfortable conversation every once in a while?
Well, let me tell you who I got a call from yesterday, okay? Um, Robert Fergoso's partner, okay?
Okay.
She's buying a house. Robert is giving me a lot of referrals right now, and I'm very appreciative. I I've been doing this for 30 something years, and to get calls from certain types of people, it has a little bit more meaning to me than other people, even though it's just another client. But it's the person who's referring that person that where I just say thank you, right? So, I'm like asking her, are you sure you want to buy right now? I'm trying to sell myself out
Downplay,
of the
yeah,
deal.
and
Yeah,
downplay it a little bit. I mean, it's logical. It's a logical insertion.
yeah. And then she goes, well, I think rates are going to go up. And I said, okay, all right. I'm not in a disagreement with you. And she goes, and I'm making money, and I'm ready. I'm ready. And and I told her, well, historically speaking, as long as you own your home for 7 years here in California, even if the home prices drop after you purchase it, it's going to be worth more than what you paid for it, or at least the same as what you paid for it, as long as you can weather the storm for 7 years. And she goes, oh, I'm not worried. And I'm like, okay.
Okay.
And I at that point, I just got to shut up, right?
By the way, that
Because,
same person who I know who you're talking about also doesn't have a social media page. Take it with a grain of salt.
well,
And feels that she doesn't need one.
it's I don't think it's the same person that we're thinking. I'll discuss the name after
Well, people who have an optimistic outlook of where the market's going always worry me.
yeah. I mean, I'm not in dis. for people that are concerned about losing their job, then I would absolutely have pushed it a little harder than the one question that I asked, because my job is to give advice. That's what I do. And so I just wanted to make sure she was in the right mindset, because, some people, if you see that pair of shoes at Nordstrom's, it doesn't matter what the cost of that pair of shoes is, they're buying them. And, the price, market timing, any of that stuff doesn't matter. But that wasn't the case. So I just let it be, right? I'm not, here's the deal. I have to run my business and I have to generate business. That's what I do, but I do it in an honest, ethical way by giving out data that is not one-sided. So anyways, we have the conversation after the phone call was over. Hey, Fred, let's find out what I qualify for, blah, blah, blah. And I sent her, go to this website, pull your credit report. It's free. It doesn't cost anything. It's not going to affect your credit score. It's called a soft inquiry rather than a hard inquiry. And then get me a recent paycheck stub. And then I'll be able to tell you exactly what you qualify for in about 5 minutes. So she goes, great. And so she sent it over while I was driving to Arizona yesterday. And now I'm going to be able to figure out what she qualifies for. But my point is that there are people that are not afraid to buy because they have job security. And job security has a lot to do with people's feelings about purchasing. Like, for example, do you care that your house went down in value? No, I don't, Fred. Why not? Because I'm not selling. Okay, that makes a hell of a lot of sense. And I said, that's exactly how I feel about my condo in Hawaii. I'm not selling. I don't care what happens to the prices. I'm not selling. So the prices can go sideways, backwards, forwards, reverse, whatever direction they want to go. Hang upside down like a bat as far as I'm concerned, because I'm not selling my condo. I'm going to live there as soon as my son starts going to college, because I'm not going to see him as much. He's going to get a girlfriend, and his girlfriend is going to take precedence over coming out to the Palm Springs area to spend a weekend with his dad. I get it. So I'm going to spend more time. I'm not moving to Provo, Utah, or wherever the hell you're moving, Lee.
Actually, I'm leaning back towards Vegas again.
Oh, okay.
Vegas makes more sense. I actually have friends out there. It's a short drive and a short flight to go watch BYU football games and my daughter performing.
Yeah.
And I get all the entertainment I want. You know me, I need my entertainment fix.
Yeah, and I do like some of your friends that we've gone to dinner with in Vegas. What's the MMA guy?
Eddie Yeagan.
Yeah, he's a really cool dude. He's like a really down there. You wouldn't think that guy was an MMA fighter because he seems.
Oh my God, he's a complete savage.
Yeah, but he seems, like he really seems like he's a teddy bear. Like he really seems like he's a genuinely nice guy.
He really is.
And you have, when you're a fighter, you have a different mentality. But I'm sure I looked him up once and I saw a couple of his fights.
Oh my gosh, he fights like a unleashed animal in all of his fights. And not to mention, one of my co-hosts from my boxing podcast is out there. Boxing's out there. As long as I stay inside during the day, it'll be fine in Vegas. And not to mention, I'm going to be real happy when everything is just cheaper by literally 10% or 15% of every dollar I make. I mean, I objectively look at living in San Diego. It's costing 30 cents on every dollar I generate to live. And sometimes, in some cases, 40% of every dollar I make to live in San Diego, as compared to somewhere like Las Vegas, where food is a little bit cheaper, gas is a little bit cheaper, there is no state tax. Entertainment is basically free out there, for goodness sakes. Believe it or not, that's a huge expense in my life. So I look at those things. I objectively look at the over when you're going into a recession. I think you have to look at all those contributing factors of, yes, Lee, but it's 111 degrees. Yeah, but I've got air conditioning. Okay. And to be perfectly honest, I'm not paying $500 a month to San Diego Gas and Electric. I'm paying 250 for Nevada. It's like a no-brainer in my universe,
Yeah.
especially with the edge of a recession about to happen. Let's grab a couple of more of these stories and get your feedback. The 22-year low. We talked about this the other day. Mortgage demand hits a 22-year low. I don't mean to chuckle every time I see these, but as someone who's talked about these things for the better part of a year occurring, and they're now occurring, it's borderline comical to me, Fred, to watch it all play out within. This is maybe a 3-week span where the crap has hit the fan at this point. Uh,
Well,
Go
yeah,
ahead.
it's Loan Depot just laid off another 2,000 employees. You know, I hear from industry people, you know, what's going on. Sprout Mortgage just shut down their doors, and then someone posted. Let me see. I want to call them by their proper name. Whoever posted it, it was up. But yeah, it was Tina. She posted about what's going on with Sprout Mortgage. They basically were required to sell the loans. They didn't sell them because these lenders will lose money by selling the loans. So they just basically didn't perform, and then they shut down, and now they're being sued. That's crazy. And that's some serious fraud right there. That you cannot promise to sell something to someone and receive the money and then not deliver the loan.
Yeah.
That's fraudulent.
Let's move
So,
on. Next story, Fred. The perfect storm. This is the other thing that has happened over the last 2 weeks. Now people are comparing this to 2008. All right, let's cover it one time just so we're all on the same page. It wasn't 2008, it was 2007. It just didn't hit a major metro till 2008. But in 2007, Cleveland, Ohio was the epicenter, in my humble opinion, based on what I saw. Different situation. Those were loans that were built on no-nos and Ninas and ninjas and God forbid, like some of the craziest loans in the history of mankind. IndyMac created the home construction no doc, 100% no construction loan, and would hand them out based on FICO score up to $750,000. And ultimately, then they started grading loan quality to increase the interest rates, selling them off to Credit Suisse, the crazy Swiss. Go ahead and watch The Big Short, and creating collateralized pools of money to invest into these things because the market was accelerating at a great rate. It was all built on a house of cards. And thanks to the Frank Dodd Act, as well as some other things that came into play, we stopped that. Wells, Chase, and B of A got out of the business of selling shaky loans. They left that work to, companies that were beneath them, and they would lend to those companies who would then make loans based on whatever terms, and then they would sell those loans off to the federal government, in essence, get the money and return that money back to the major lending institutions. That is our current setup, and they've been doing it for quite a while. That means that the bulk of our bad debt for people who can't pay are now being serviced by the federal government, Fred. And that's the big difference today. We're not going to lose a countrywide. We're not going to lose, a Crocker Bank. It's the Fed, well, the federal government, the FHFA, which technically I think they're supposed to be an independent body, or are they federal government? I'm never quite sure, but they're the ones buying up all the paper. Um, what would happen if there was a housing crash and the federal government got left on the hook for billions, if not trillions of dollars of loans?
well, I mean, that already happened in 2008, 9, and 10 with Fannie Mae,
Right.
Freddie Mac.
And
You
they
know,
got
those,
bailed out and taken over, but yet we're still doing it strangely again. I mean, before the pandemic, FHA loans were the highest defaulting rate loan. And now we've just got people defaulting in general. I How many times do we bail out Freddie and Fannie?
well, here's the thing, and I don't know what the current statistics are on FHA, but they collect this mortgage insurance premium, and they were using that mortgage insurance premium to bail out their own default. So it didn't, last time I heard, and I haven't checked the numbers recently, but last time I heard, they did not have to go into the government's money. They just went into their MIP fund and were able to bring, you know, all these loans and not have it any situation where they had to go outside to get money from the government. They had enough money in their own kitty, so to speak, in their own piggy bank, because you know it's an upfront cost of 1.75% when you do these FHA loans, and then on top of the upfront fee of 1.75, then there's a monthly fee for MIP, which is 0.85% or 0.80. I forget. It's one of those two. I never sell FHA loans because you can never get rid of the mortgage insurance as of like 2016 or 14 or 15. You can never get rid of the mortgage insurance. So I never sell those loans, even though the mortgage insurance is lower than on a conventional loan. At least with a conventional, you can refinance out of it, or you can go get an appraisal 2 years later and show that the property has gone up to 80% in value, and therefore you will be able to get rid of the mortgage insurance. You cannot get rid of the mortgage insurance with FHA. Let me repeat, you cannot get rid
Cannot
of the
get rid of.
mortgage
Well,
insurance with FHA.
and that would bring up the bigger question, right? How much cash do they have on hand to weather the storm? That's ultimately what it comes down to, right?
Right.
Why do banks buy back? Why do banks put cash on hand when there's a market downturn? I saw it with IndyMac. I've stood in what they, sort of town hall meetings with all the staff of, we're going to fortify our cash on hands for the, we see where it's going and the default rates and yada, yada, yada. We're going to put cash on hand. Well, it didn't save Countrywide, didn't save IndyMac, didn't save Crocker, didn't save WAMU. The list goes on and on and on. It takes billions of dollars to cover these debts, if not trillions of dollars. And unless you're Wells Chase and B of A, you can't call up the Fed and go, hey, I want $1 billion, which again, if you watch The Big Short, they talk about Lehman going, they knew full well they'd get bailed out. Right. They did. They all do. I mean, if you talk about any of these corporate entities from Tesla to Chase, if it really went sideways, they will get bailed out. They will, with your money. I mean, that will happen again. I don't, the outrage of people going, why are we bailing these people out? And they're giving themselves bonuses because they can. There's nobody to stop them. And that's not conspiracy. That's track record historical facts of what's actually occurred. Let's move on to the next story. There we go. I like this. This story I like, right? This is from Forbes, and they're the first company that I've seen. This story came out yesterday, where they're seeing that this might have an effect on the recession. So let's talk about it. We're a day away from that announcement, Fred. Does the housing market collapse deepen or increase the speed of a recession?
Oh, that's the first indicator. It's what happened. It's the same thing that got us into the recession in 2007, and it's the same thing that got us out of the recession. It's always the housing market first, and then construction is a close second right behind it, because the housing market has a lot to do with the construction market. I was at a bar last night at the W here in Phoenix, or Scottsdale. I'm in Scottsdale right now, and this guy is a contractor. he was showing me on his cell phone, and you know, I don't know why people show me this stuff. I didn't ask him to show it to me, but he was a really cool dude. I said, "Oh, you look like you're from OC. Where are you from?" He goes, "Oh, everybody says I look like I'm from OC." I'm like, I go. He goes, "I guess I have the look." I'm like, "Yeah, you do." I can usually spot him out pretty quick. But he was a really cool guy from Seattle, and he says, "I'm 18 months out. 18 months out on bids right now. 18 months out on bids right now. Construction is absolutely doing fine. When the real estate market starts hurting, guess what? The construction market follows a close second. And we've all seen how these construction guys have struggled before. But this guy's 18 months out. That's crazy.
Yep, it sure is. While we're doing it, let's see how the big boys are doing. Let's see how Lennar's doing. They're down and still crashing quite dramatically.
Yeah.
I think KB's
The,
stock is.
the CEO of Lennar in the Riverside Inland Empire division, his name is Mark Torres. He's a personal client of mine. Very cool guy. I tried to get in to do loans for his, communities, but they were owned by they own Eagle Home Mortgage, and Eagle has been in the news for frauding people. And I'm just like, are you ready yet, Mark? Are you ready to use someone who knows what the hell he's doing? And I said, I can put a loan officer at every one of your communities. I will find people and I will get good people. Fred, that's a corporate decision. I have nothing to do with it. Because I use you doesn't mean that I can use you for our corporation and for all the homes that we sell. And I'm like, okay, well, you know who I am. You know my number. Call me. And that's it. But yeah, I mean, these guys are really, really the sales tactics at these
Aggressive.
The sales tactics, and let me just talk about
I've done new track sales.
So
I don't know what I feel dirtier about in my life, new home sales or when I was selling HELOCs. They're both right up there on the I'm going to hell fast.
well, when you go into the home improvement division, be prepared to pay 300% on the upgrades. So this is what you need to let your clients know, right? But the clients don't care because they want it new and they're willing to pay for new stuff. So 300% markup on the upgrades. That's in the home improvement division. And then when you go to the mortgage division, oh, we're going to give you a $10,000 credit. But here's what they do before they give you the $10,000 credit, just so you know. On Black Friday, right before, Thanksgiving, and they have the Black Friday sales. I mean, let's face it. On Wednesday, right before Thanksgiving, they increase the prices. And then on Black Friday, they say we're having a 50% off sale, right? Now, of course, there's good deals. Don't get me wrong. But there's a lot of people having Black Friday sales that increase the prices 200% on Wednesday, and then they're having a half off sale on Friday, on Black Friday. So what are you doing? You're just paying the normal 100% because half of 200% last time I checked is 100%. So what my point is that these guys, oh, we're going to give you a $10,000 credit, but then, what they're doing is they're charging you $20,000 in closing costs. So I just want people to know you got to tell your clients to shop around, because I said, you know what Walmart does? Walmart has everyday low prices. You hear that on all their commercial, everyday low prices. They don't have this, let's mark up the thing and let's have a sale, because everybody knows they already have the lowest prices. So they don't really have, they have some sales, of course, but you don't see them advertising sales on television. All you do is see them advertising everyday low prices, and there's no gimmicks. right? You just know you're going to go there. You don't really have to shop around because you already know they have the lowest prices because their team does all the shopping for you. They make sure they're lower than their competitors, and they have people that's their entire job, is to make sure that their prices are the lowest. So that's how I am with my mortgages, because I'm the owner of the company and I don't have to have these special gimmicks. Now, I do a special gimmick with my no closing cost loans, and those lenders don't offer zero cost loans. Most banks, most credit unions, and most home builder lenders don't offer zero cost loans. And then I do a break even analysis, and then they realize, oh, it makes more sense to do a zero cost loan. So I usually steal the business away from those home builders. It's not that hard for me to do it, but that's only because they don't have sophisticated loan officers over there. They just have the loan officer that said, oh, you got a $20,000 credit or a $10,000 credit, we're going to give you a better deal than anybody else. And their deals are, after they give you the credit, they are somewhat aggressive. I can still beat them, but they are somewhat aggressive. So I'm just saying, when it comes to these home builders and why their sales are down and stuff like that, it's because of their technique. A lot of it has to do with their tactics
with
as
the
well.
and the price they started at. They're not hurting at all. It's just dramatic watching them come down. Let's get to one last point, which is the rate hike's coming, Fred. What is 0.75% to 1% actually going to do to us when Jerome pulls the trigger?
Well, let's look at the 10-year Treasury and see how that's because it's an hour away. The announcement is 1 hour away.
I imagine he has to go a full point. I mean, if you were asking me, and you know I like to bet, I like a point. Here's dramatic. I like a point to a point and a quarter.
Okay,
if I were Jerome, I'd go a full point and a quarter personally.
Okay, so that's the link to the 10-year Treasury. I just provided that to everybody. The yields on the 10-year Treasury are at 2.76 right now. They're down 2 basis points, which is very, very minimal. But the rates are a tiny bit better today than they were yesterday, which means that the bond market is where all the money is. That's where all the big investors are. That's where all the people who are in the know. You just watch the bond market and you know what's coming. So I have a feeling, based on the bond market, I have a feeling it's going to be 0.75%, because if it was going to be 1 or 1.5, the bond market would be reacting very negatively. But right now, the bond market's really, very calm and tame, and it's down 2 basis points. So based on that, my prediction is 0.75 points, only because the bond market's not freaking out. And these people that are the bond traders, you don't think they know what's going on? Oh, bet your butt they do. These guys know what's happening. They know.
You think Jerome was at dinner last night with some big time hitters who were pumping him for information?
Of course. Yeah.
How much alcohol do we have to put in Jerome to have him give up the number for today?
Uber, Lyft.
Yeah, no doubt. With all that said, we're going to take questions offline for the people who are here live. For those of you that are on Facebook, we appreciate having all of you. It was fun to do that live, so we'll end Facebook. All of you here that are live, please take advantage of the links that are submitted to you. Please schedule your one-on-one red videos. If you're going to do email marketing, please sign up. I'm doing email scrubs today and tomorrow, so I can get an email out on Friday. And for those of you that are here on the call that still have an upgrade to the system, we've rolled back the price. Click on the link. You'll get it at that previous price. We'll take your questions offline.